The world that I'm seeing is a world where Google generates $1 billion a month, and they send $1 billion a month to Citibank or JP Morgan, and they say, buy $1 billion of Bitcoin, and it's like $1 billion, now it's $2 billion a month. Then Meta sends $1 billion a month, and Microsoft sends $5 billion. These are the high power rails, right? These are the rails that move $1 billion a day, maybe $1 billion an hour, maybe $1 billion a minute, right? And when we get there, then I think Bitcoin takes its next leg up.
At the beginning of the year, the U.S. Securities and Exchange Commission approved several spot Bitcoin exchange-traded funds, marking a historic moment for both Bitcoin and the broader cryptocurrency space. This development provided institutional investors with new opportunities to invest in Bitcoin for the first time in 15 years, sparking significant conversations about the role of cryptocurrencies in traditional investment markets. Major Wall Street players such as BlackRock, Fidelity, and Millennium Management LLC joined the fray, raising expectations for Bitcoin and other cryptocurrencies for 2024 and 2025. Despite initial optimism, the reality has been somewhat disappointing. Since reaching a peak of $73,000 in March, Bitcoin has largely traded within a stable range, leaving investors anxious about its future. However, according to MicroStrategy founder and executive chairman Michael Saylor, there is no cause for concern. Saylor remains confident that Bitcoin is on track to meet the high expectations set earlier in the year. During a notable fireside chat at the Bitcoin 2024 conference with Bill Miller IV, Saylor outlined 3 key events he believes will drive Bitcoin's price to new heights. Saylor predicts a massive 100x increase in Bitcoin's value over the next few years, driven by the early stages of these pivotal events. He is highly optimistic that these developments will lead Bitcoin from its current value of just over $60,000 to potentially millions of dollars per coin. Next, we will present clips from Saylor's discussion on 3 crucial regulatory shifts that could dramatically boost Bitcoin adoption and attract multi-trillion-dollar giants like Apple, Microsoft, and Google.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think that there's the big 3. There's 3 policies that accelerate us to institutional adoption, that 3 things that take Bitcoin up by 100x from where it is today. The first thing is to legitimize and accept and endorse it as an institutional grade asset. So fair regulation of the asset itself in the securities industry. And in January, we got the first installment of that with the approval of the spot Bitcoin ETF, but it was an incomplete regulation because the SEC still denies in-kind creation of ETF shares. And the SEC still denies the ability to trade options on top of spot Bitcoin ETF shares. And the acceptance was given grudgingly, it was basically, I did it because I had to do it, but I didn't like it, okay? So what's the significance of that? The negative opinion expressed when the approval came, that sits as a shadow over a lot of mainstream investors. We need to flip from a negative opinion to at least a neutral opinion. Like why is it that a federal regulator isn't expressing an opinion that this asset is good or bad versus that asset? So I think that that's got to change still. I think that the lack of in-kind creates and redemption means that it's a taxable event if I want to contribute Bitcoin or withdraw Bitcoin from an ETF. So if you were to invest in an ETF and it 10x'd and then you wanted to take your Bitcoin in self-custody, you're getting charged 30% of the Bitcoin. If you wanted to move the Bitcoin from an ETF to a bank or to another custodian, you're getting charged as if you sold it, even though you didn't sell it. So right now, there's a tax inefficiency. The second plank is fair accounting. If I wanted to keep you from buying anything, I would establish an accounting rule that said you can only lose money on the trade, but you can never make money. And that's a one-way ratchet. If I actually set up an accounting system where you always lose, you never win, And if you win, you have to act like you lost. And then if you lose again, you could win 99 times, but the 100th time you lose, you report one loss, no wins. Okay, that's just prejudicial and hostile. Okay, so indefinite intangible accounting allows you to lose but not win. And it's the kind of accounting you give to things you don't want people to buy. And so fair accounting was critical. And this January, it became optional. And next January, it will be mandatory. And so that's a big step forward. Let's just say we're 75% of the way along there, but we'll be sort of at 100% when you have 24 or 36 companies and they're all using the same fair value accounting and everybody's talking about it, and you start to see companies report multi-billion-dollar or 10 mega-billion-dollar gains on that accounting, right? That'll be a big deal.
The repeal of the SEC's SAB 121 accounting rule is the third regulatory shift Michael Saylor is eagerly anticipating. SAB 121, introduced in March 2022, required public companies to record the fair value of digital assets on their balance sheets, a departure from the traditional off-balance sheet treatment for custodial assets. This rule directed financial institutions, including banks, to report customer-held crypto as liabilities on their balance sheets, compelling firms and centralized exchanges to disclose the amount and nature of the crypto they hold on behalf of their customers. The rule has faced significant criticism from cryptocurrency investors, as it effectively restricts regulated banks from offering digital asset custody services to high-net-worth clients. Saylor argues that repealing this rule is crucial for large tech companies, like Apple and Google, to begin purchasing and holding Bitcoin as a reserve asset. In his conversation with Bill Miller, Saylor expressed that once this regulatory barrier is removed, tens of billions of dollars could flow into Bitcoin regularly. We will now share additional clips from Saylor's discussion, where he delves into how these regulatory changes could accelerate Bitcoin adoption and attract substantial investments from major corporations.
The third is if individuals aren't allowed to self-custody, that's hostile to Bitcoin. If I pass the law saying you can't custody, that's an attack on Bitcoin. If companies can't self-custody, that's an attack on Bitcoin. If I had a company whose job was to sell custody services to institutions, if I provided custody to Yale Endowment or to a big hedge fund, and then if the government had a law that made it illegal for the custodian to provide custody for your asset, that's hostile. So right now, SAB 121 is a rule that basically makes it impossible for a bank to custody Bitcoin. And the right way to look at it is, well, that's basically a regulation preventing companies that want to custody from custodying. And so the result of that is you have basically the government saying, I guess you can buy the ETF, but the ETF is not allowed to use their bank to custody the Bitcoin, and they can only use a crypto exchange to custody the Bitcoin, and we're going to sue the crypto exchange. And so when you have the government hostile to the crypto custodian, hostile to the banks, hostile to the institutional custodian, you're kind of you're undermining the ETF industry. So the third plank is we just need for the SEC, the OCC, the FDIC to allow banks like JP Morgan and Citigroup and Goldman. But by the way, you might not like JP Morgan because of what the CEO has said. But let me guarantee you that within a year or 2 years of when it's possible to custody Bitcoin, JP Morgan will start a process to do that. And within 4 years, they'll be custodying Bitcoin because it's money, and that's what they do. So you want a world where Goldman Sachs, Morgan Stanley, Citigroup, JP Morgan can custody Bitcoin, because if they can custody it, they can buy it for you. And if they can buy it, they can sell it. And if they can buy it and sell it and custody it, they will give you a loan on it. And they will also give you yield on it. So the world after the banks can custody Bitcoin will be, I could have Bitcoin at a bank too big to fail, backed by $1 trillion balance sheet. They would give me 500 basis points of yield. You know how much money you get if you put your money in T-bills right now? You get 550 basis points risk-free. I think that the banks will give Bitcoiners 550 basis points risk-free when they can custody the Bitcoin. And so the world would be very different if you got paid 5% interest on your Bitcoin while you're actually holding the Bitcoin. And I think the other thing is they will give you a loan at SOFR, which is 550 basis points plus 50 basis points spread. So you can get a loan of 6% from Citibank or Bank of America when they can custody the Bitcoin. And then the third thing is they'll let you post the Bitcoin as collateral against your house or a mortgage, and you'll be able to I think, refinance your mortgage maybe to 100% loan to value or 120% loan to value by putting the Bitcoin as collateral.
During an earlier keynote speech at the conference, Michael Saylor presented an extremely bullish forecast for Bitcoin's price. He outlined 3 scenarios for Bitcoin's future value by 2045, a bear case, a base case, and a bull case. In the bear case, Saylor predicts Bitcoin's price could reach $3 million per coin, representing an increase of approximately 4,300% from its current price of $68,000. His base case is even more optimistic, projecting Bitcoin to hit $13 million by 2045, a staggering 19,000% increase from today's prices. This would elevate Bitcoin's market cap to $280 trillion, a 280-fold increase from its current $1.3 trillion market cap. Saylor's bull case is even more aggressive, forecasting Bitcoin could reach $49 million per coin by 2045, pushing the cryptocurrency's market cap to over $1 trillion. Please share your thoughts on Saylor's Bitcoin predictions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.